Hi guys, it's Nick here. Thanks for joining me for another portfolio update. This is the third episode that we're going on, and this is when I'm going to start to invest more money into the portfolio. I know I've been trying to avoid putting it in. I just wanted to see how much £1,000 could grow on its own, but there are quite a lot of companies that I want to add to the portfolio, and I think it needs the cash. Without it, I'm just going to have really small holdings and there's going to be no real benefit to having them either way. But for now, we'll jump across, have a quick look at the portfolio, see how it's going, see any of the losers and gainers that we've got, and any plans that I've got with the companies that are in there so far. And then we'll jump into these high yield companies that I'm deciding whether or not to get. There's 10 of them in total, but I'm only looking to add 5, so I'll go through some of the reasoning behind which ones I want and which ones I don't want. So then guys, we just jumped onto the portfolio, and as we can see, we're running at a 4.89% gain. However, this number isn't correct. I know I've only invested £1,000 into this account. The other £82.34 that it's saying is invested, that's profits I've taken off other shares that I've held. So in reality, there is £135 gain on this, so 13.5% gain rather than the 4.91 that it's saying right now. So just having a quick look over the portfolio, we can see what's doing well, what's not doing so well, changes that I may or may not want to make at this moment. There's nothing I really want to change. I just want to leave it as it is. Most things are running there or thereabouts where they want it to be, and nothing's had a massive loss or a massive gain. Obviously Nvidia, AMD, Square, still got massive gains on them. They will be reducing over the next couple of rounds of investment, just so we can take the growth out and just put all the money into the dividend stocks. As you can see, Royal Dutch Shell is down, obviously, as expected. Royal Dutch Shell is a company I'm thinking of removing, as when we look at the new companies I'm looking to add, they are energy companies as well. Some of them do deal with petroleum, crude oil, and they might be a better alternative to Shell at the moment. However, Shell are looking to innovate, so it could be worth keeping. But yeah, other than that, a few percent either way. Persimmon, 12.66% gain. That's good. Property, house building, real estate. That's what I do other than investing. So any company that I know is making money from, building or selling properties is always something that I'm really interested in. 3 to 5% swings either way isn't a massive, detriment to the portfolio at the moment, and obviously 4.9%. It's still reasonable. So we'll move on to the prospective new companies that we're wanting to add in. So now I've had a quick look at the portfolio. There are a couple of reasonable gains and losses in there. So there is going to be some work I'm going to do, whether that's cost averaging or whether I'm going to cut some of those companies entirely. I haven't quite decided yet, but with the portfolio still growing, still developing, I don't want to make any sort of rash decisions quite yet. So I know why you've come here. You want to see these high yield stocks that I found. I'm going to go through them one at a time and determine which ones are going to be worth having. Obviously with super high yield, there's going to be reasons why you wouldn't invest in them, and obviously high yield is just drawing you in just for the yield, not necessarily because the company can sustain those yields. So here they all are, 10 of them in total. I'm looking to add 5 of these into the portfolio. As you can see, 4 of them are energy companies, which is to be expected because a lot of them tend to pay a higher yield, and these yields range from just over 4.5% to over 18%. So we'll just start with one that I'm definitely going to be adding to the portfolio. This is ABBV. ABBV, it pays 4 dividends a year with 2.1 times dividend cover with a yield of 4.98%. Looking at the sort of recommendations online, there are a lot of buys and holds, so there's no sells, which is always good. So we've got the average price range of this is looking at about $109-ish, with the low of this range being $96. So it's still below the range, so there's definitely still some growth to get back into where recommended prices are from investing professionals. So ABBV is a healthcare and biotech company with research and development into, drugs. And obviously with the way things are going right now, medical research is a hot topic, and it always will be. Unless every disease in the world is cured, there's always going to be the need for medical research and research and development within the sort of healthcare sector. So the next company I'm looking at is British American Tobacco. It again pays 4 dividends a year with 1.5 times dividend cover and a yield of just over 8.3%. Looking at the recommendations online again, they're mainly buys and holds, which is good, and it seems to be more of a swing towards the buys, which is even better. So the current target price for this is just over 3,800 pence, and the low of this being 2,300 pence. So at the moment the price is right in that range, so it's, might not have that much growth in it, but it pays a good dividend, so it's definitely something I'm interested in investing in. However, there is a stigma around smoking, and obviously this is a tobacco company, so if you want to invest in this, it's whether you agree with the sort of ethical basis of the company. But they are working on developing products away from traditional smoking and cigarettes and going into the sort of vapes or sort of other smoking alternatives. Evraz is a company I was going to put into the portfolio, but I've missed the ex-div date, so it's not something I'm going to be putting in the portfolio right now. It only pays 2 dividends a year and just missing the cut-off, so I'm going to have to wait 6 months for the next dividend, so it's probably not worth buying right now. However, it's got 1.4 times dividend cover and the yield is 14%, which is great. However, looking at the online recommendations, it is quite a mixed bag. Over the last 3 months, there has been a mix of buys and sells. It does seem to be swaying more towards the buys, but with it being quite mixed, it is going to be a bit of a risk. Evraz is a multinational steel manufacturing and mining company. It does a lot of its work over in Russia, but it does have mines in other places throughout Europe and the world. Obviously focused mainly in Russia. A lot of the company is owned by rich Russians, one being Roman Abramovich, who owns Chelsea, so you probably know who he is. He is a majority shareholder of it at the moment. So next we'll have a look at one of the first sort of energy companies on the list, and it's ONEOK. ONEOK pays 4 dividends a year, but it only has 0.9 times dividend cover, so it's actually paying out more than it can afford. But with it being quite close to even, it is still something I'm going to look at. And when it has a dividend yield of over 13%, it's definitely something that I want to look at further. Currently, looking at the recommendations, there's a very strong bias towards holding this rather than buying or selling. Looking at the month of August, there was 12 out of 16 recommendations saying a hold, and this is a similar theme to what we've seen in previous months, going back to May. Again, its target price is sort of $33. The low of the sort of target range is $25, so this is bang within that range. So ONEOK is an American mainstream service provider of natural gas liquids with networks of gathering, storing and distributing natural gas liquids. Next we'll have a look at Imperial Brands. This is another tobacco company. So again, ethically, if it's something you want to invest in, you can. If you think it's something you shouldn't, then obviously move on from this one. There are plenty of other ones on the list. Imperial Brands pays out 4 dividends a year. It's got 1.4 times dividend cover with a yield of approximately 6.6%. So it's still a good yielding company. So over the last 3 months, again, this has been predominantly buys and strong buys, with 15 out of 19 recommendations being either a buy or a strong buy. So the target average price is just over 3,000 pence, with the sort of low of the target range being 2,100 pence. So at the moment it's actually trading below the lows of the range, so it's definitely time to get some money into it. Right, going back to the natural gas supply, we're looking at Pembina pipelines. This is similar to 10K, but the Canadian version. Pembina pays out monthly dividends, which is really appealing to dividend investors. So you're getting a dividend every month or nearly every month, and it's got a yield of 7.2%. So never mind getting a dividend every month, you're getting a good returning dividend as well. So I was looking at the recommendations for Pembina, and there weren't that many, but the ones that I could find were pushing towards a buy as well, which is always something you want to see. And these have been all buys for the last 4 months, so there's been a consistent recommendation to buy this stock, and it's something that I think it's something I'd want to do as well. So the average trading range of Pembina at the moment is looking around about $41-42 per share, with the low of this range being at a little over $40. So with it trading at $26-ish right now, it's definitely somewhere where there's going to be some good growth in that, as well as the great dividend it's paying as well. Realty Income, if you're a dividend investor, you know who this is. This is a real estate investment trust that pays out a monthly dividend and is coined the monthly dividend company. With it paying a lot of dividends, it only seems to have about 0.5 times dividend cover. So whether or not that dividend payment is sustainable is a question, but it has seemed to consistently and always has paid out a dividend. And the yield's at 4.58%, so it's probably one of the lowest, or if not the lowest, yielding company on the list. But paying out monthly, it's still a good benefit for a dividend investor. Currently, looking at the recommendations, there's a very strong bias towards holding this rather than buying or selling. Looking at the month of August, there was 12 out of 16 recommendations saying a hold, and this is a similar theme to what we've seen in previous months, going back to May. So again, this is a REIT based around commercial tenants, so it rents out a lot of property to commercial clients and companies in the States, and it's a member of the S&P 500 Dividend Aristocrats list. So it's a good dividend payer for anyone who wants a dividend investment. Oh, are you still with me, guys? We've got over halfway through the list now. There's just 3 more to go through, and this next one is the highest yielding one on the list, so I hope it's something that might interest you. This is Energy Transfer LP. It pays 4 dividends a year. Like most of these, it's a quarterly payment, but the yield is 18.35%, there or thereabouts. Looking at the online recommendations from July, it is in strong bias towards buying or strong buying, with a total of 14 out of 20 recommendations saying buy or strong buy. So the average target price for this is a little over $10, with the low of the range being at $6, and it's currently trading just over $6, so it is towards the bottom of the range, but it's definitely within the sort of target range which the experts expect it to be in, so there might be a little bit of growth. It is, however, another natural gas pipeline company. This one's based in Texas, with a lot of their other facilities being in and around the sort of southern states of America. Store Capital, this is an alternative to Realty Income. This pays out 4 dividends a year, and its yield is about 5.2%. So it pays out less often than Realty Income, but the yield is slightly higher, so depending on what you're looking for, one might be better than the other, or alternatively you just could have both. With looking at the recommendations for Store Capital, it is a very mixed bag between buys and holds, with it almost being 50-50 for the last 4 months. So this is a stock that's probably not going to see a massive amount of growth, but there is still confidence in it and there are still people buying it. So the average target price for Store Capital is $28, with the low being at $20, and it's trading just around about $26. So it is sort of right in that range. I wouldn't necessarily want to buy it any higher than what it is right now. I would ideally like it to come back just a little bit for me to invest, but it is still a company that I'm looking at getting involved with. And here we are, got to the end of the list, just one more company left to go. So the last company we're going to look at is TC Energy. TC Energy pays 4 dividends a year with 1.5 times dividend cover, and it pays out a yield of 4.945%, which is still good. There weren't a lot of recommendations for this company, but from the ones I could find, we're looking at about 3/4 of them looking towards a buy or a strong buy. And this has been a similar theme over the last 3 or 4 months. So it is still something that, you know, you'd want to look at buying right now. So the average target price for this company is around $54, with the low of the range being $42. So right now it's trading right in the middle of that range. So again, it's not something I'd expect a massive amount of growth from, but it is still a good dividend paying stock. So with that said, that's all 10 of the companies. I'll be looking at getting into these companies sort of in the next couple of weeks or so. So by sort of early September, I'm going to be invested. I'm going to be adding, like I say, about £250, £300 into the portfolio just to get the money into these companies, just so we can increase it up. In terms of what we'll be reducing in the portfolio, just to allow the space for these, I haven't fully decided that yet, but when I do it, I'll get the updated portfolio video done for everyone. Just one quick point before I go, I just thought I'd pop up what companies are paying dividends in the next month. So hopefully by sort of the end of September, we're going to have some good dividends coming in, and we're starting to see how a dividend reinvestment portfolio should work. And the first dividend we're getting out is from Raytheon on the 10th of September. And then we've got 3M, Persimmon, Rio Tinto, Royal Dutch Shell, Games Workshop, ABBV, and then finally Pepsi on the 30th of September. So I hope you've enjoyed this video. I've tried to keep it quite short and sweet. I don't think it's worked that well, but if you have enjoyed it, I'd really appreciate you just clicking that like button. And if you haven't already subscribed to the channel, please subscribe to the channel. Click that notification bell just so you get an update every time I upload a new video. And if there's anything you'd like to ask about the portfolio or in these companies in general, please just drop it in the comments below. Please remember though, I'm not a financial advisor, I'm not an accountant. Everything in this video has been my own personal opinion, and if you want to invest in these companies, please do your own research and speak to a professional if it is something you want to do. But with all that said, I look forward to seeing you next time, and in the meantime, learn, invest, success.